Hi, this is Tony Sagami again. Yesterday they came out with the GDP numbers from the United States, and Wall Street was pretty happy with it because it showed our economy contracted by only by a negative 1%. That's a big change from the first quarter, where the economy contracted by 5.5%. So the Wall Street crowd thinks that's great. We only dropped by 1%. First of all, I don't really believe that number. I think it's a lot worse than that, and it'll get a lot worse throughout the rest of the year. But more importantly, you got to ask yourself, why do you want to invest in a country that's falling, whether it's 1%, 2%, or 3%, instead of a country that's growing? For example, when China just released their GDP numbers a few weeks ago, it showed that their economy expanded by 7.1% for the first 6 months of this year. So you have such a giant disparity between what's going on in the U.S. and across the Pacific Ocean. And remember, China's not the only place that's growing across the Pacific. India is well over 5%. Vietnam, Taiwan, those are doing just fine too. The countries that are suffering the most in Asia are the ones that are very export dependent, particularly to the U.S. And that would be Japan, South Korea, and Singapore. The rest of Asia is doing pretty darn well. And so I think everybody understands that stock prices follow corporate profits. Well, there's another rule to that corollary, and that's that corporate profits follow economic growth. So if you want to find companies that are actually growing their profits, don't look to economies that are slowing down and contracting. Look at economies that are growing and expanding. And that, my friends, is across the Pacific Ocean. So also at the same time, you've had a pretty good rally in the U.S. stocks. The S&P's at bouncing around that $1,000 level, which I think, 1,000-point level, which I think is going to be a serious point of resistance. And after the rally that the market's had in the last couple months, you should use this as an opportunity to lighten up on your U.S. holdings and shift some of those dollars over to Asia. Now, I'm not suggesting you dump the U.S. market entirely, but I think you should overweight Asia because that's truly where the growth is. Until next week, this is Tony Sagami signing off.